And as I mentioned, guys, there are some notable movers this morning that are definitely putting pressure on the NASDAQ in particular. One of those is Poshmark. And what a difference from ThredUp, which we talked to the CEO of which yesterday. Poshmark coming out with a negative forecast. Whew, that is quite a tumble, Brian Sozzi, in those Poshmark shares.
Yeah. This is really, this is a shocking decline in Poshmark. Let's keep in mind, in mid-January, Poshmark came to market. The first trade on Poshmark out of the gate on IPO day, $97.50.
Wow.
And the stock has gone down really gone down lower ever since then. I would say this is the second disappointing quarter in a row for Poshmark. Now the company is blaming Apple privacy changes. We heard that from Snap a couple weeks ago, to a lesser extent Facebook, for maybe coming in well light in terms of sales and profits. Also a big pickup in marketing expenses, and that is expected to continue into the fourth quarter here. That's why they're looking for an operating loss on an adjusted basis of about $7 million to $9 million. And I would also say on the conference call last night, the executive team hinted an even more aggressive pace in terms of marketing expenses in 2022, and I think that probably has spooked a lot of folks on the street. But I know Poshmark founder Manish Chandra, he's been on the show a lot. He watches us, so if he's watching this, please give us a call, because I think there are a lot of investors that better need to understand what is happening here. I didn't hear a lot of answers on that call last night outside of the Apple issues.
That's right, Brian. Absolutely. So really the company here blaming Apple's privacy controls, having to increase its spending on marketing. And the other thing that Poshmark had called out, that a number of other companies across industries have called out, have been these higher shipping costs. And this is something that they expect to extend into this key holiday shopping season, where these shipping disruptions, these supply side disruptions, are going to continue to incur additional costs here for Poshmark. Again, though, even looking on the demand side, given this fourth quarter forecast not necessarily showing a whole lot of strength in that side of the business as well, given that the company sees revenue of only up to as much as $82 million, whereas the street was looking for $85 million. So definitely missing consensus on the midpoint of that estimate as well here. But again, the stock really getting punished here because of these results and this weak guidance, guys.
Yeah, and what's also, just one final comment on this, what's also confounding about all of this is that Poshmark is sort of the higher end of this market, right? We heard from James Reinhart of ThredUp yesterday. Women want to go out right now. They're buying heels. They're buying going out clothes. And so that makes it especially confusing that Poshmark is not doing better in this environment. But to your point, Saz, hopefully we'll hear from Manish what exactly is going on here.